Your market news now. Asian stocks slipped while the dollar climbed despite lower U.S. Treasury yield as markets assessed mixed signals from U.S. policymakers and economic data on the path for Fed interest rates. Yesterday, Minneapolis Fed President Neil Kashkari suggested that the Fed may need to forgo interest rate cuts this year due to stubborn inflation. Meanwhile, crude oil wallowed near two-month lows amid signs of easing supply pressure and continued hopes for a Middle East ceasefire. To give us more perspective on the markets, we are joined by Chantal Marks, who's from F&B Wealth and Investment. Chantal, thank you so much for your time. Given that it's a week where we've got either a lack of U.S. economic data or major economic data, it's kind of hard to see what you can position for or react to. And with that said, then, what's driving markets?
Well, in the absence of those big economic releases, it's earnings, it's companies and what they are doing on the earnings front. So we've seen quite a few releases coming through in the US. We're at the back end of US earnings season, but generally the market has reacted quite strongly to those releases. And we're seeing something similar play out in Europe as well. And even on the JSE, you can see the impact that Anheuser-Busch is having on the overall market today. And I think that it will probably remain like that for the rest of the week going into next week until we start getting some inflation numbers from the US again.
You touched on earnings. How would you sum up US earnings season so far?
Well, it's on balance been better than expected, but that has come to be expected from the US. US companies have a tendency to underpromise and overdeliver, and that has come through in this specific earnings season. What has been quite interesting was how the market has reacted to small misses or small victories, and also to guidance. When guidance is only slightly soft, we've seen shares sell down quite substantially. The market has been punishing companies for missing estimates and then also for missing on the guidance front. But I think overall pretty decent. Even if we look at guidance, more companies than usual have been making positive or have been putting out positive guidance on a proportional basis than what is usual. So all in, pretty decent so far.
Tomorrow we have Sappi, which is releasing their earnings. I'm curious, what do you make of Sappi as a stock?
Yes, so I mean, Sappi is a very cyclical business. It is very exposed to pulp prices and to paper prices generally, and it behaves like that as well. I think over the last few years, we've actually seen a bit of an improvement in terms of the stability within that business, and that has removed a little bit of the sensitivity to kind of cyclical components, but it still remains an issue for Sappi specifically. Going into earnings this week, we'll be focusing on the underlying performance of the business. In the last set of results, the results were complemented by a revaluation of their forestry assets. And with that not reoccurring in the second quarter, we would be focusing on the actual operational performance. One of the other issues that the business has faced more recently has been overstocking by their clients. But we have started seeing signs of that dissipating, and hopefully that would provide a positive tailwind for them.
When you look at the biggest risk for the market, what is it right now, whether we're looking at local markets or US?
Oh, it's absolutely the rates picture. I think that when we start seeing inflation numbers again, particularly out of the US, and if those inflation numbers look hotter than expected again, then it could have a profoundly negative impact on inflation, on interest rate expectations, and as a result, the market as well. There are obviously other risk events also. I think from a geopolitical perspective, we need to be quite careful not to underestimate the impact that geopolitics will have on markets, and also on the political front. I think from the South African perspective, going into local elections, we will probably see some volatility in our stock market and our asset prices, and something similar is likely to play out in the US as they approach election season in November.
What data do you think will be instrumental for the Fed before they make a move on interest rates? Is it jobs or is it inflation?
It's probably a combination of both, but I think that inflation will have the biggest weighting here. I think once they start seeing a sign or signs that inflation is starting to take another leg down, because we have seen a bit of a stalemate on the inflation front over the last few months, then it will be a lot easier for them to motivate for a possible cut in interest rates. I think that they will also look at broader economic data and not just jobs and interest rates, because even though the jobs market has been quite buoyant, there are reasons why the jobs market may have held up well that don't necessarily speak to the inflation picture. I think the general health of the consumer and the economy will also be top of mind.
If you want to play the AI theme and you're not particularly looking at the likes of Meta, are there other industries for you to be able to get that benefit?
Yes, I mean, you obviously have your directly impacted or more directly impacted companies like the semiconductor design and producer kind of space, NVIDIA, TSMC, those types of guys. Then you have the companies building the applications like Meta and Microsoft and Apple and Amazon, utilizing that to a certain extent as well. But you need to start thinking outside of the box. I think AI can have an impact much broadly speaking. One of the areas that I find quite interesting is the use of AI in security and defense. So companies like Axon and Palantir. And then also even in areas like mining support services and oil support services, the utilization of AI in that space has become quite interesting.
All right, Chantal, thank you so much for your time. That is Chantal Marks from FNB Wealth and Investment. And tomorrow, the big event is going to be the Bank of England's rate decision. We're going to be paying attention to the policy statement, Governor Andrew Bailey's news conference, as well as the quarterly monetary policy report. So we'll unpack all of that on Friday after we have digested all that information coming through.